Good morning, everybody, and this is your Dow Jones day trade setup for today. So big up, big down, but the question is that just a retest of some breakouts, or is it something more sinister? And one thing's for sure, we do have diversions. So there's pretty much a double top. You can see that I've got my cursor on it now. I lie, it's like 1 point lower. So not diversions. Okay, so what I'm talking about is this swing high here versus this swing high here. Looked like it was pretty much a double top. It's very close, but this bar is 1 point or just a few pips below the previous high, so that's not diversions, although it does look like it. Typically when you see diversions this way, it's continuation and the trend is down, so you'd expect to move down. So at the moment, we've had some breakout of structure, and this is the area where we closed, which is 29,648. So we've broken up, we've come back to test that level. Don't like the way the oscillators are looking here. To me, it's an indication that we're more than likely are range bound, and that is the upper end of the range, and this is the lower end of the range. This is kind of the middle of the range. That's kind of what it's looking like on the 8-hour. If we start drilling down to the 3-hour, whenever you see tails like this, you tend to get worried. Big buyers, a lot of buyers coming off the bottom here, a lot of sellers coming off the top, and again, not really testing any structure. So there is my level. It is 33.83 on the upper end. So we break that to the upside, trading the 3-hour, then we can expect a range target equal to the height of this range, which is around 5.8% move in the market, 1,784 pips. So that is the one scenario. The other scenario is that we hold this area where we are now. Look at how much interest there is at this zone. So you see it's 1, 2, weak attempt there, 3, another little attempt here. So that is at 29,648. So for me today, there is pretty much range bound. We'll have to look on the 50-minute for some gaps here. I see all the other markets have got gaps. Look at the hour, oscillators grouping nicely to the downside, and here there is diversions. There's a swing low, there's a current swing low, but the oscillator's making a new low. So that's diversions, and that's continuation diversions with a trend up. So remember, you've got diversions on the top, and you're trending down, you're going down. You've got diversions on the bottom, and you're moving up. It's a move up. So that's the one scenario that I can see at the moment, and this would be the area I would be paying attention to. I'm just going to fine tune it because there is my swing high, there's my other swing high, and we did touch on it Friday, so that's 29,628. That is the one area that I'd definitely be paying attention to. Now, if we just drill down to the 15 minutes and start looking at what we have here, we've got a grouping of all the oscillators to the upside. We do have this breakout here, which hasn't been tested, and we've got a crossover of the moving averages, all pointing that we're probably going to move down. Then we have a gap down here. You see this gap here, and that is kind of slap bang in what was that? That was Friday, Thursday, Wednesday. So Wednesday's rangy day. We slap bang on the middle of it where the level is there. So that's a possibility. We'd obviously have to break below the low of Friday. And if we do break below the Friday, come back down here, test this, then move back up and bump our heads here, then I would be looking at shorts to the downside. Converse is true. If we come to this area, find support and start moving up, I'd expect to move to the underside here at 29,929. If we get above this and find support here, then I'd be expecting a move back to this level here, which is 33.83. So those are the scenarios that I have in play at the moment. And one bit of advice is going to be the same advice as on all the indexes, to be honest. Don't just jump in, because ultimately on the higher time frames it looks like a range forming. So don't just jump in, because you're going to get yourself burnt. Wait for the structure. When you see price action on the structure, go for it. If the price action is not clear, stay away, and it'll save you a lot of pain. So until we break through these this level to the upside, 30383, we are range bound, and until we break below this 28621, we are range bound. So that's the ultimate, but it's a massive range, so you can get down to lower time frames, and you'll probably find some good opportunities on the 5 or 6 minute chart later this afternoon, or well into the US session. And you can see there's another little gap here as well in the 5 minutes. So, well, I'm on the 6 minutes, sorry. But that's kind of my view at the moment. Later this evening for us in Europe, you'd be able to pick up some half decent trades here, I think, just using these levels and trading off the levels and taking profit on the next level. That's kind of what I would suggest. Anyway, that's kind of my view for today. It's be very cautious, guys. Keep those stops really tight and don't just jump in. Make sure you've got price action on the level, not above, not below the level, smack on the level. You want that tail touching that level before the price action actually kicks in. And take the break of the price action, put your stop above that price action, and trade the stop, guys. Do not trade without a stop. Anyway, that's me for today. Hope it helps, and we'll catch up with you tomorrow. Cheers for now.